Yo, that joint still go on. That joint still go on.
Elongated this morning, right?
Well, I mean, it was the normal joint. It just, no, in fact, it's on time. Look, it's 11:01.
Man, we getting better.
Camera's working, audio's working.
Getting better. You kind of frozen on my end though, but yeah,
I'm still moving. I'm still moving.
There you go.
Yeah. Yeah, she ready already, son.
Building. She in the building.
Oh, she on the road.
She look like she might be sitting in the back seat.
Well, yeah, she's in the car. She's not driving. So,
okay. Good.
So we I guess we're gonna flip the schedule up because she ain't here early, and that's good because y'all can speak among yourselves, because you good at like the interview.
Here you go. Hello, everyone. Saturday, January 24th. It's gonna be a cold blast out there. Let's do the weather report real quick. Make sure you guys are warm. Got some food. Got your flashlights charged. Got your electrical stuff charged up. Your phones, tablets, laptops.
Yeah.
You know what I mean?
Water.
You got some warm clothes too, just in case.
Layers.
Yeah. And number one, be safe.
Be safe out there. Chill out.
Definitely. Yeah. Relax, man. Catch up on a good book or something. Who knows?
Yeah. Or work
Think
on
about your business.
Work on taxes. That's it could be either way. So
gather your paperwork. Right.
Yeah. So seeing that it's the 24th of January, and what's on everybody's mind. I was going to talk about the perfect way to cook an egg, or maybe like how to stain your floors. You know what I'm saying? And I said, taxes. Yeah. So for over 100 episodes, you've heard me blabbering and talking about taxes. So we ran into our esteemed colleague not too long ago and asked her to come on to discuss her unique approach to taxes. So here we are today. Look, she turned the camera off now. Now she turned the camera off. She's hiding. Oh, look at that. What you had to go make a quick change. I'm going to bring her in. You're going to give her the applause effect. So,
yeah, let's do it. Hold up. Let's get it right. On my thing.
We're in trouble, man.
Here we go. Hold on.
We're in trouble. Hold on. I got to figure out a way to make it work. Right? Yeah, there she is. The woman of 1,050,000 hustles. It's Hustle Woman herself.
Oh, really?
Yeah, it's Hustle Woman. Yeah, look at it. I'm trying to get the screen right. I'm trying to get it, Don't mind me. I'm just playing with the screen here. So okay. All right. I'm going to let y'all do what you do, like you do it for television.
Good morning, Keisha. How you doing?
Great day. How are you guys doing?
We're doing all right. It's Saturday, cold.
That's right.
There we go. All right. Now
he just shocked me when he told me you was coming in, and so I was like, "Yeah." She told me she was gonna get back to us, but I guess he did a better job. So, welcome to the show.
I'm here.
Welcome to the show.
Look, I'm here.
That's right.
I'm trying to take care of business and do this as well. So I'm here.
That's right. That's right. So you're in the car. What you up to this Saturday?
Well, I'm leaving a property that I had to go take care of and go make sure it was good before the storm came. Yeah.
Gotcha.
Oh, heat went out or a pipe burst. One of the two.
No.
Okay. You just prepared for it.
I had to go, make sure some locks was done and some different stuff like that for a new build. So I was trying to make sure stuff was taken care of.
Oh, man. Ain't nobody go in there. Yeah, I got you. Lock it down. All right, but anyway, that's not what we're here for. You're a woman of many, 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 many talents. So, I mean, I'm you know, I'm gonna let the biz therapy man, ask you the questions. Because and I'm gonna preface this by saying that from our last meeting, you guys are in the empath wing of tax administration. I am not in the empath wing of the tax administration, so I think you guys can have a great conversation, and I'll pop in when necessary and field questions in the chat.
Exclude yourself. Anyway, how are you geared up? You got all your bullets ready for tax season?
I think I do. I think I do. I mean, it's been up and running ever since earlier this month with clients wanting to get their taxes done, and of course, since I am an authorized e-file provider through the IRS.
Look at you.
Stuff has been accepted already. My stuff has been getting accepted for the past week and a half, 2 weeks by the IRS.
Yeah. Oh, yeah? Okay. Oh, you direct. Well, first of all, you ain't even introduced yourself. We know you.
Okay, well, y'all didn't. Okay, so my name's Keisha, and I am the founder of Next Level Tax Services, LLC. That's in Durham. We have been operating since 2008. So I love to help people and help people understand their situation that they are in, and try to help them in their situation and what is going to benefit them the most, and not everybody, but what is going to benefit them.
Okay.
Well, welcome to Heyward-CPA-LIVE, where we are impromptu hosts on the live show on Saturday. So thank you for introducing yourself.
Yeah.
And just let me put a pin in something. I definitely owe you a phone call, so you have one in the next 48 hours. However, what are your other superpowers that you do in terms of business and or helping people?
Well, I wouldn't necessarily say a superpower, but okay. I mean, I like to help people understand. I like to help people get out of situations that they're in when it comes to finances, as far as going over their paperwork, planning, strategizing, but like they need to know certain things, like in life, not just with taxes, but just in life, as far as just how, I'll say one thing, life insurance. I know we were talking about life insurance, and that kind of commingles with finance, because if you don't have it, then you may leave your family more in debt, right? If they're already in debt, they're going to be more in debt because they want to try to bury you properly. But so I don't know, I try and do a full circle kind of with finances, with helping people, understand the buying aspect, the part of renting, or just trying to get out of debt, or what to do when you get a refund. If you get a refund, how to manage it, or how to put it in certain places to where it can work out for you for the whole year or in the future, and not just spend it right then.
Right. So you offer those services as well?
I will be offering life insurance coming next month. Yes.
Right. Okay. And how do people schedule a consultation with you for life insurance as well?
Well, for life insurance right now, the consultation setup has not been put up yet, but they can always set up an appointment with taxes and put in a consultation and put notes in as far as what they want to speak to me about. That would be the office number is 919-294-9117, and the link to make an appointment is long. You want me to give it to you?
James,
So
put it
it
up
is
on the screen, man.
I know all the HTTP. I'm just lining up all my questions. You go ahead. It's next level.
Okay, so it's HTTP. No, so to book an appointment is HTTPS //
I
book
got that.
me a time.com and then / next level tax services.
Oh boy.
So it should
Okay.
read book me / next level tax services.
Where did it go?
Yes.
Oh, here it goes. It's crazy long, yo. It's like 100
It is. I
years.
said it's long.
Book me a time and then all right. So now, we got the preliminaries over. So now we're gonna dig deep. I just wanted y'all to get that going to start the conversation.
Right.
Now you ready? Because we're gonna talk about taxes.
Okay,
Let's talk. Yeah, we're gonna talk. We're gonna talk. So, as we say all the time, you and I say, or you say more so, there's a difference between the service that you offer and the service that we offer, which we do know. Yeah. So, but people will say, but wait a minute, you're both doing taxes. How could it be different? But it's all about approach. So I want you to speak to the people about your approach to preparing a tax return for somebody. The floor is all yours. Okay.
Well, I think my approach is a little bit different because I'm more hands-on.
Yes, you are.
I'm more hands-on. I do in person and I do virtual. But you can actually come into the office and meet me and sit down with me. We can go over your paperwork, go over questions, have a one-on-one. I like to build a relationship with my clients, right? So it's just not, and you're able to, of course, contact me and call me year-round. And when I say personal, like build a personal relationship, I say like I have clients that call me during the year if they switch their jobs and they ask how to fill out their W-2 form. If their kids are going to college, they may ask questions about the FAFSA. And all this is, I'm doing this as free consultations. Like when I do this.
Yeah. I was just about to ask, do you answer these questions for free?
That's one of the perks that come with, having your taxes prepared with the next level tax services. I try to also put my client's shoes, right? And so, like I said, I build a relationship with them, so they're able to call me year round and ask questions. Now, if you have a business, you're trying to start a business, and you have a list of questions, how to start it, and I'm gonna help you get your EIN number. We're gonna go on to the IRS website, and we're gonna go to the Secretary of State. Oh, the phone is not. Then that will be a consultation. But little questions, 1 or 2 questions, and you've been a client for years. I'm going to take that time to help you with that. Yeah. And they feel comfortable calling me.
I'm sure they do. In fact, I know they do. But wait. So to summarize, then we're saying that you're more of a hand holder then.
I guess if that's how you want to say it. I wouldn't say a hand holder. I'm just more of a friendlier.
What are you trying to say?
Tax professional.
Wait, as opposed to who? Who's not friendlier?
Well, I would say that my CPA James is
I'm very friendly. Once you get on the phone with me, if you get to that level,
if you can get on the phone with you.
I mean, listen, man, we all got different styles. All right.
Exactly.
So listen,
You are great. You are great at what you do. If somebody does not want to communicate a lot, as far as face to face or on the phone, you're great at the work. Work is great.
what I'm trying
but
to
if
say
you
is,
also step by step,
Get him, Keisha, get him.
yeah, whatever. No, listen, no, because I'm not gonna let you. Nicole is great. So Stephanie is great.
Nicole is great too. Nicole is great. Stephanie is
Kory
great.
is great. They talk to all these folks.
Mm-hmm.
All I do is sweep up around here. That's it.
Okay.
I just sweep up. That's all I do. But the point is, and this is interesting because, like, there's a place for all this. What you do is a lot more. There's a market. There's a big market for it, and some people, I mean, like it's like a staircase. Some people they need a different. They have a preference. It's chicken steak. You know what I'm saying? So like that. But it might be. It's a little warm and fuzzy with you. But we've talked about that. It's a little bit too warm and fuzzy at times. I mean, but that's another story. So what are the things this year that taxpayers need to look out for? You've already been doing some, so tell us what we're looking at. What's this year looking like with the big, beautiful bill? What are we seeing here?
Hey, well, one good thing I will say is that the standard deduction that has increased, right?
Mm-hmm.
That's one good thing. And the earned income credit, they've increased that a little bit. It's on where you are, in your income tax bracket, if that's going to even benefit you or not, right?
True.
But then there are some things. Oh, and then also with this is on another spectrum, but those who itemize, they have increased the interest. Before it was 10,000. Now it's
the state and local tax. They capped it up to 40,000.
Yes.
Yeah.
So
I know. I got you. But yeah, they got that. So in the event that you are getting capped at 10,000 is a great thing. But
yes.
That's wonderful. So you've seen thus far. Have you seen anything with the tips? Have you worked with anybody with the tips claiming these
I
tax
actually have. And right now it's kind of running the same. It's really not gonna, I think, really change until 26. Because I do have clients that are still paying on tips, but it's benefiting them because of their income. So like I said before, it's two different ways this here can play out. You always have pros and cons to everything. But for those who actually don't make a lot, they're not in a high tax bracket, they depend on those tips to help them with their earned income credit and the child tax credit, because that gives them more income, right? Now, the ones who do not want it, they're going to benefit from it because they're not going to have to pay taxes on it because they're already at a higher tax bracket. So those extra tips and stuff that they're getting, they're not going to want that to be on there, and it won't be on there going forward.
Dig it. So check it out. All right, you talked about a couple of things out here, and I want to put them in layman's terms for people. So you talked about an earned income credit. Now, we usually don't talk about earned income credit here.
Okay.
There's no particular reason.
There's no. There is because there's a reason for earned income credit.
No, I said there's a reason, not a particular reason we don't talk about it. No, I'm saying
maybe don't get it.
This ain't about us. We talking about you and
Okay.
telling people what the earned income credit is, because how it comes across is, let's be real. Let's talk about it out here. People are like, they don't work, and then all of a sudden, they got like 17 grand that they waiting on every year, and then they your cousin, and you work, drive trucks every day and whatever, and you get like $100, and you like, yo, I don't understand. Now people know it happens, but they don't understand what's going on, and so you can speak to that better than I can.
So, earned income credit was created for the lower income individuals to try to help them, right?
Mm-hmm.
That's how the government came up with EIC, earned income credit.
Mm-hmm.
So in order for you to receive it, you have to be in a lower tax bracket, right?
Mm-hmm.
You have to have worked,
Mm-hmm.
right? You can and
that's the big part.
And yes, you have to have work, and you have your children. I mean, you get it because of kids, right? Also, and everybody that has children does not get it, right? Because you have to be in a lower income. So you have to make at least, I would say, let me see right now. If you make in between, and these are some low numbers, people, okay? If you make in between like 5,000, and I'm talking about AGI is your adjusted gross income, to, I would say, 18,000, 17,000, and you have 1 to 3 kids, then you'll get a good amount back, right?
But that sign say I get like 3,000 per kid.
And that's no. So those signs,
Tell me what the sign says.
do not like those signs.
Oh, okay.
Because
all right.
it throws people off, and then it's embedded in their head, and then they call or come, and their taxes are prepared correctly, and they're not understanding. Well, I'm supposed to get 4,000 per child, and I'm like, but it doesn't work like that. If you have 3 kids and you only made $5,000 for the year, do you think that the IRS is going to give you $12,000?
That's just a ploy to get them to do their taxes.
Makes perfect sense to me.
That's it.
What do you mean? If I have 3 kids and I only made $5,000, aside from the fact that we don't know how I lived, it makes perfect sense for me to get $12,000. What are you talking about?
Are you serious?
No,
I'm just saying the mentality. Yeah, it makes sense. What you mean? How I'm supposed to live out here?
Nah, but it's just marketing play to get people to do their taxes, because you know how many people that don't
to get them in the door.
Yeah.
But there's also a fine print. And anything, I mean, the government, if people know, they're not just giving it. They're giving some, but you have to put in something as well. So what I try to do I try to explain to those clients, but then also educate them, and also give them enlighten them as far as like what they can do with this money, how they need to try to maybe get out of the situation that they're in, right? So I kind of coach them, I guess, a little bit, right? I've been doing clients. It's so funny. Just yesterday, I've been doing this client for about, I think 10 years. When I first started working with her, she was working at McDonald's, right? And now she is a supervisor at the VA. Mm-hmm. And she was just saying yesterday, how, of course, how God is good, because I was always telling her the different steps to take. Of course, she had jobs in between there, but I think I encouraged her, because she really didn't have, she's the only child. Mm-hmm. Her mother, didn't have the, I guess, knowledge or experience, education, or however. But I love to see my clients like improve and progress and build and better, and then build a better lifestyle for their children than they had. Now there are still some ones who don't, want to grow and just want to stay stuck in it, and that's okay, because I still encourage them. I still try to, I enlighten them with things versus what. But yeah,
Uh-oh.
and during the year, then they call and they're like, "Guess what, Keisha? I got this, or I got that, or I did this. Remember we talked about this, and I did it, Miss Keisha. I did it. So
Miss Keisha. Oh, Miss
that
Keisha. They got you,
yeah,
Miss Keisha, out in these streets. You told us
they
about that.
call me Miss Keisha or either tax lady. Yeah.
You need a T-shirt that says "Tax Lady." That would be dope. That would be so. But no, that's showing your point of view on these tax preparation. Because all jokes aside, the information about so many financial phenomena in this, is unknown in the community. So, this firm, we come at it at one way, you coming at it another way, all intended to help. But you told us a story. Where does your backstory of why you care the way you do? Like what drives you to be like that?
Because I am a parent and I have children, and I just always try to lead with love. I just always try to lead with love and try to understand people's situation, try to put myself if I was in their situation, and try to know that everybody didn't come from the same background, right? Everybody, they don't live in the same area. And I think regardless to people's situation, I think if you lead in love, if you lead in kindness, if you lead in trying to understand where they're coming from and try to help and assist them, then it ultimately works out. Now, everybody, you can't you can't lead all horses to water and expect them to drink. But if I can lead some there and they drink, then I'm excited. I'm excited because I think also ultimately I'm here to kind of serve, right? And I enjoy helping. I enjoy helping people. I enjoy assisting people, not just with taxes, other stuff outside of taxes and finances as well. Just life in general, like with some females, how they should carry themselves. Um, so yeah, I think we just try to lead in love at anything that I do.
You're a steward of the people, which is great.
You for the people. You for the people. Yes. You are for the people. You've always been for the people. You used to have the lobby lined up. People would be lined up in Meridian, like with their clipboards, filling out the stuff, waiting to go and see her. She'll have them lined up for real, and they would be lined up and come in and but it was almost like a school because it was like, yeah. And you just see them waiting to see Miss Keisha, and she just out here. And they all, they were coming out with checks too. But that's like that. It's like, so it's stylistically different.
Back then it was checks, now it's direct deposit.
Yeah, now it's direct deposit. So yeah, so she's but I mean, you're benevolent. I mean, I love it, because it's a contrast. Oh, okay, it's not a complete contrast, but I'm saying it's more neighborhood like. It's more community, that a specific community that you're helping to create a ladder from one place to another. And that's very, very nice and necessary, especially in our profession, because it's so many like it's misinformation all over. Let's go to number 2. So we talked about earned income credit, and you telling me that I don't get $3,000 to $4,000 per kid. All right. So all right. what's the next thing most often, misinformed thing that you hear?
Let me see. Besides earned income credit, besides with that, that well, if they don't have children, so if they don't have children, then they assume or get the information from someone that everything that they paid out in taxes you get back in. And that is not.
Oh, I got that. Why? How they figure that one out? But I got you. Okay.
Where they got it from.
Somebody told me. Google told me.
Oh, my man did. But or they tell you have to, so it happened for somebody, but they didn't tell the whole truth.
Right.
Because
exactly.
they didn't know.
And they don't know the numbers behind it or something, or they don't know. The IRS is all about numbers. It's all about numbers with the IRS. And so you can have 3 people. You can have more than 3 people, but I'm just use 3 for an example. 3 people that make the same exact amount, right? Mm-hmm. Down to the dollar, down to the penny. But everybody is going to get something back, and somebody may not even get anything back, right? And just because you have children, that doesn't mean that you're going to get something back. Yeah. And it depends on what has come out, mm-hmm. right? What federal taxes have you had being withheld? And then it depends on if you itemize, right? If you have deductions that you can write off. Mm-hmm. What the age of your children is. That's another thing with earned income credit. After 16, you don't receive earned income credit for the children, even if you're in that lower tax bracket, because they have aged out, right? So there are many factors with taxes as far as with income. Even if you make the same amount, there are factors with children, if you're standard deduction opposed to itemized, if your children are over a certain age, if you had taxes withheld. So it's always, like even when you see the commercials on TV, that little fine print, or how the person tries to talk real fast, like you get something free, but you got to buy this, you got to buy this, it's always some hidden things behind it. People don't know why they came out that way.
Well, are they really hidden?
For education,
they're hidden in plain sight. That's what they're hidden. I mean, look, let's just be real. I'm just throwing scenarios. I made $50,000 and I withheld $1,500 from my check. Oh yeah, how much I'm getting back?
Well, if you are single, you're not getting anything back. You're actually gonna.
Yeah, well, I mean that's a normal thing for me. I ain't worried about telling somebody,
but if you make $50,000 and you itemize,
you still gonna.
It depends. No, because another thing, it depends on if you had work done on your house, if you had residential improvements, you had to buy new HVAC, new windows, new doors, all that can be put on there for the homeowner. So you have to really dig into things whenever somebody's itemizing too. See, some people don't know that that when itemizing, you can also write off your state taxes that you pay for your vehicle.
Mm-hmm.
Contributions really matter whenever you're itemizing. Whenever you get to that point, the standard deduction isn't anymore, and you're itemizing what you contribute to nonprofit organizations. Your time volunteering, your miles. So all of that matters whenever you're itemizing, and I ask every little bitty thing.
Yeah, but here's the trick. Come on, you had to tell me the trick. Since 2017, the standard deduction has been raised so much that most of your itemization is for you to itemize. It has to be more than the standard deduction for it. There's cases where people use the itemization instead. That's rare, but you gotta. And I think this year, I don't know, for a single person, it must be about 14.5, something like that. So all your stuff got to be more than 14.5. So I'm just throwing it in, just.
Yeah. But I do have clients that do itemize. I have a good amount of clients that itemize.
You got all these big money clients, man. They paying all this interest and they giving away $50,000 to their church and all that stuff. That's on them. I mean, it's cool. I mean, I know we got a few itemized, but I'm just saying for the year, married filing jointly is 31.5. So you gotta, but once they raise that standard, that's the standard deduction is 31,500. So and we're considered, even though most of us, well, in Durham County for sure, but most of us, our property taxes are going up. We're still a low tax state. Like we're very low tax. Property tax is our personal income tax 2.9. Yeah.
For other people coming here, it's low, but for us, it don't seem low. It's high, right?
Well, it's raising. But what I'm saying is that for 2015 thing, if you're married, your total deductions of state tax, interest, which is low because everybody's interest rate is low, contributions, pretty much everything has to exceed 31,500 in order to itemize. So
but you only got a good interest rate if at that time during COVID, if your if you refinanced and if you had a decent credit, because that also goes back into financing when your credit has to be good in order to get that better interest rate, right? So take some of this risk and pay your bills so your credit can be.
You going on something else? We just had that conversation. We just had this
flow. She flowing.
But you compare. I'm talking about pure dollars. That for a home, anything 5%, 6% is low, considering that people used to pay 18% for homes in the early 80s. So that's what I'm saying. It's relatively. So your interest for the year, some people are paying less than 10. They got a house, you know what I'm saying? I'm just talking about to get it on top of that 31,500. You have to have a combination of things to be able to exceed it. So that's what I'm saying. The taxes on, like, for instance, in the northeastern states, there are people who legitimately, the 40,000 on property taxes and sales and state taxes, that still is not all of it. It ain't even close.
Them California and Jersey and New York, those they.
And then even the income taxes, because especially in New York, you got 2 layers in New York City. So that's what I'm saying. Not
New York taxes. But I just don't.
Hey,
but
they're not bad once you get the taste of them. So, but anyway, it's not about that. I'm just saying. What I'm trying to say is that we just talking about the math, people. That and you touched on it, because I was saying the deductions that always comes in, and people that are wage earners are really limited in their deductions. I mean, if you don't itemize, which we've just said, it's like if you don't itemize, you got the standard deduction. Your kids don't. I'm not gonna say it the way I usually say it, but there are no more exemptions for your children. So if they're
nice,
I mean, so you're not claiming your kids, just so you understand that. For years now, you haven't been claiming your kids. So if that went into your calculus or their Christmas presents, I'm just letting you know, because you wasn't claiming them. So so some of these things, and basically they put a lot of these things in the standard deduction, but they did keep the child tax credit. Child tax credit is thing. We deal with child tax credit. We could talk about child tax.
So if you have a student that goes to college up until the age of 23, 24,
yes, but it's the number of years that they attend that you can take the benefit for. It's not how old they are. 7 years chilling, nah, dog.
But also, like, it's better for you to claim them. Now they may not be in school, but it's better for you to claim them to be able to claim head of household if you're single,
If you're single.
then them claiming themselves, because they don't get earned income credit for themselves until they are like 24, 25. Like they don't.
Well, it's all relative. If they working full time, if they in school, it's something. But I think a big part of that goes into the healthcare thing.
I have some that they kids be at home, they don't be working, and like no, they work and they make like 3,000, and then they want to
they play video games.
They want to tell their parents, "Oh, I'm gonna claim myself because I worked," but you only made $3,000, and you live in a house, and you don't let your parent claim you. I'll be like, look, it's more beneficial for you to claim that child.
Yeah,
they're not in school, but you need to claim so you can file head of household, because that's gonna, help you. You work at Duke or UNC or whatever. You've been working. You paying all the bills. They in there playing the game. They 21 years old on the Nintendo, and they work $3,000.
$3,000, they could have got a PS5. If they made $3,000, I'm just saying, if they got $3,000. I lost. She went into the gamma thing. But look, just to build on what she's saying, I'm not being a contrarian, because what I'm really trying to have people understand is that practitioners interpret things in different ways. We all get to the similar place, but we interpret it, and then some of these things, you have to look at. It's just when we say claim, that's like how people use the word friend. You don't get an individual exemption anymore, so you can use your child for or a qualified relative to make yourself be head of household, which then will let you you'll have a favorable tax rate against being single. But what I was like, because incidentally, I will sidebar, I'm her tax research department, so just so y'all understand what's happening here, that in cases of this $3,000 person, if they had any federal income withheld, they're still able to take the standard deduction and file a return without that jeopardizing the head of household return. So, but these are things that we just in our practice we don't see a lot. That's why I wanted her to come in and
give another perspective, right? Give a different angle. Yeah, absolutely. There might be people out there that connect with her as well. On that level and in that situation.
Because
so this is good.
Yeah, so that's what I'm saying. So
it's bad.
Yeah, because it's different spots, and yeah, right. Pet should be counted as dependents. Yeah, that was the next thing I was. Oh, it's executive building. I love it. You're back for more. I love it.
Hold on.
She had to go to the satellite phone now. You on the satellite phone now? That what you did?
My other phone's getting too high. I had to get on my work phone.
Oh, hey, that's because you were telling the good stuff. But what I was saying is, I was I don't know if you was listening, in your absence, I told everybody that I'm your tax research department anyway. So it doesn't matter also. So what I was making this, and you, ladies and gentlemen, you getting an inside look at how tax practitioners discuss things with each other. So you see that. But what I was going to say is, in the case of that video game playing person, what I was saying is that if they made $3,000, they didn't have to keep playing Nintendo Wii and could have got a PS5. That's what I was saying. Then you cut off.
Maybe they wanted to play Nintendo Wii, man.
Well, then that's not too bad. Then they should have some break. My thing is, no, but I was going to, just as a practice point, that, because the exemptions don't exist, the person can take them as a head of household and they still can go because of the standard deduction, just if they had anything withheld from their check, which if they made $3,000, they probably didn't.
But they wouldn't get earned income credit for themselves. They would just get the amount that was withheld. And then also I let like a lot of people in their say 50s or 60s, they may be taking care of their parents. And so I try to, educate them. This is one way. And if their parents are living with them, or they're taking care of their parents, or they're taking care of their disabled sibling, that's living with them, a lot of times
Yeah.
they do not know that they can claim their parents or their their siblings or their uncle or aunt or whatever, if they're taking care of them and living with them or taking care of them, and then that allows them to file head of household, right?
Mhm.
Here's a
So
question.
they hadn't been told that, and so they're like, oh, and then that may just give them enough to make sure where they come out not owing as much or owing zero, or maybe even getting $25 back or something, but at least they're not owing, because then that allows them to file head of household, and that changes things a little bit,
Gotcha. All right. Now look, we have a question. You didn't know.
Mike,
This is like Q&A around here. We got a question from the chat. Let's see how sharp you are, Keisha. Are you
Okay.
ready? Let's see. All right, here we go. I got your back though. So here we go. Here's the question. Mike Nice asks, what if a person makes about 30 to 40 grand and lives with you? Can you claim them as head of household and still be able to take the standard deduction? And they still be
Okay,
able to
so I got you. So you can't do both. You can't claim head of household. I mean, wait.
Now they talking about them. So the scenario I just laid out. Say the person, instead of 3,000, they made 35 to 40,000, and they live with a relative, but the relative is paying over 50% of the bills for the house. Could the relative claim head of household for that person?
It's best not. If that individual is making 35 to 40,000, they need to claim themselves, because if somebody else claims them and they're dependent of another, because somebody else claimed them, then that person possibly is going to end up owing, because they're not even claiming themselves. And so then therefore that person, if they don't have somebody else to claim, then they're going to have to file single, unless they're married or
Then
whatever.
have somebody else. Yeah, to give. And I want to put some clarification on claim, because as I said, the previous Jobs Act took away what we call a personal exemption, and that was when you got $3,500 or so per person in the household. What we're talking about is claiming them for head of household. So if you claim this relative a head of household, there's a test for them to be a dependency test. What they do, I think the income exceeds the dependency test. I think 40,000 exceeds.
Yeah, it does. Yes, it does. It does.
Yeah, I think that's where the challenge is there. But one of the and just for everybody, the head of household rule is that you pay over, the taxpayer spends over 50% to maintain the home, and then the person that qualifies them, or in our terms, that you're able to claim head of household off of, there's certain criteria that goes into it. You can hit up KeishaTheTaxLady.com for something to get into it. She'll walk through it with you, but but it does things like, so things that. But in this scenario, I believe the 35 to 40 grand would exceed the income level for the dependent. So the quote unquote dependent to make them head of household. That's what. That's what I.
It would.
But thank you for the question. That's a legit question, because there's a lot of people. Look, there's a lot of grown people living with grown people, siblings.
Yes.
And just like this is a reality right now. So people are sitting there and they like, wait a minute, money, they all in my house and all this. I mean, can I get a benefit for? I mean, now if they're unemployed, if they ain't making no money, it's a no-brainer. All right, you can do it. It's called a qualified relative. But if they're making some change, you might have a little, might be a little challenge there. But yeah, that's good stuff. You got the people engaged. The people are hyped on you. You got lunch. It's beautiful here. You're putting in a full day. You're getting questions. So, I mean, this has been wonderful. It's like a tax class for me. I mean, it's cool.
Oh wow! Yes, really.
No, because I don't exercise this muscle a lot. The muscle that you've been emailing me about Shareholder basis? Yeah. We had that conversation all day. So, but this goes more to what the people are trying to know, because everybody's trying to figure out how to pay less in taxes. To be honest with you, and my answer is not empathetic. So yours will be a lot more empathetic than mine.
Yeah, and because I would say I deal with more of a wide range of income clients than you guys do. So,
you do.
I think I help them out a little bit more as far as, we're trying to understand stuff like, why is this, why come I don't get, this amount back, and my girlfriend, she got this, or, this and that. And for those in a way higher tax rate, they usually don't ask no questions. They
okay,
just
it's not way higher. Okay, first of all, let me stop with this. See, this thing is not way higher. They just the way some of the people generate their income is different. It might be a little bit higher. You got some people with some money though. Yeah, I know you got some people with some money because of the questions you call me with. So you got.
I mean, that's what I'm saying. Yes, I deal with. I can deal with somebody who makes $3,000 to somebody who makes $1 million. I mean, I just get a wide range.
Okay.
And I just did what's the name's taxes. You never know who is watching you. You never know. The guy, the owner who owns Snap, who owns he invented, hold on, because he gave me a thing. I gotta get it. I think it's over here. He invented
let's see your clients. Yeah, just see this way you get celebrity clients.
He invented
something that doesn't suck. What doesn't
Oh snap. He invented this.
Oh, the phone grip that doesn't suck. Wow.
Go follow him. Yeah, he invented this. And I was like, oh snap! Like, really? You're in my office?
Yeah, I'm gonna say, oh snap.
He's really he has a large following. Oh snap! He invented this. It's for your phone. He gave it to me for free, of course, but I gotta put it on my phone. But yeah,
okay.
You never know who's watching you.
You promoting for the people. Well, look, how about this? We got another question for you. Can you take one more question before you go?
I can.
All right. How do I prepare now for next year, according to Keith?
So how do you prepare in 26 for 26 taxes?
Correct.
So the best way to do that is you got two scenarios. If you know what your income is already, say if you're on salary and you are, so then, you may get some bonuses or something like that. But if you're on salary and you're going to get a W-2, I would find out where you are in the tax bracket and make sure that you're having the correct percentage of federal and state coming out of your taxes. That would be number one, right? Number two, then it goes to like, okay, do you have any dependents, and that you're going to be able to write off for? Are they under the age of 16? Do you have daycare for them? Or if not, if they're in college, are you paying out of college? But then also another scenario is going on in my head. Make sure, it depends on what tax bracket you're in. Are you contributing to your IRA, right? Where you can make one amount, but really make on paper you make another amount because you are maximizing your IRA, right? But with that, I really don't like. I prefer a Roth IRA more than an IRA, but we're not talking about that right now.
We'll bring you back to discuss that.
Okay. But so trying to make sure your liabilities, so you don't have to, in your deductions, so you don't have to pay that much taxes, or make sure that you're having enough taxes withheld. Those are a couple of things that's where I would start. Now, if you are an entrepreneur or a 1099 independent contractor, where it's kind of like you're an entrepreneur too, because you're getting 1099, no taxes have been taken out, and you know that you're going to make a certain amount, because even independent contractors, sometimes they have a contract for a year and you're going to get, this set amount. Look at that. Again, I would send in quarterly taxes depending on if you're going to be able to itemize, if you have children, if you're going to have deductions, if you're single and not, and say you have a contract for in between 50 to 100,000 or 50 to 75,000, and you're an independent contractor and it's just you're definitely going to need to pay in some quarterly taxes.
Mm-hmm.
Right.
Yeah,
so it really depends on your situation and your income amount, and then what you have. But I would definitely start with, if you know what you're going to make what tax bracket you're in, and try to have the appropriate percentage coming out. That's what
I'm gonna add another person to that.
Okay.
Even if you are working and you owe, like you do 25 and you owe, you either increase, but you could make estimates too. So one of the big things is that, say you make whatever you make and you owe $5,000 after all that. What it hurts people more is that they owe $5,000 on April 15th, but
exactly. Yeah,
paying $1,250 per quarter.
Yep.
Is a little more palatable, and also, because people always thought they're looking for magic bullets. Like I said, the example, somebody with $50,000, they withheld $1,500 for the whole year, and they think they're gonna get some money back. Like, okay, or someone that made $180,000, from their job, and then they've had stock sales with another 50 or whatever. Just very rarely somebody like that comes in looking for a refund, but the mindset for some folks, because they don't understand what refunds are, just to build on it as we get it, a refund is that. It's a refund. It's a refund of what you paid in. So just as a quick lesson, you gotta go? Oh, you got something to say?
Oh, I don't have to go. What I was going to also say is very important to look at, because each year it changes, but it's very important to look at where you're at on that tax bracket. Yeah. Because those percentages jump once you start changing tax brackets. So if I tell my clients, like, if you are right there on the cusp of going into another tax bracket, and that's going to make your percentage go up 5% more or whatever, and you have not, one of the easiest ways that I know, if you have not maximized your IRA, again, maximize that out, and that's going to put you back down under, so you don't go over.
Yeah. And a good place where that, since you brought it up, a good place where that can occur is you have a job and then you start doing gig stuff. You start driving Uber, you start driving, doing DoorDash and stuff like that.
Whatever.
And then you get this 1099 that goes on top of what you've done. And you kind of got some expenses, but not really like that. But anyway, and it pushes you up into this next tax bracket, and then you jammed up. So, you know what? I'm gonna close on that. We're gonna close on the Keisha point. Forget my point. I got plenty of episodes to bore you to death with taxes and how they work.
I'll be definitely trying to help those 1099 people out, because they really don't understand what they can or can't do, right? So I really try to help them out, especially those who it's not their main source of income. They're doing it as an additional as additional job, and they are paid, or whoever, IBM or whatever, right? So they're already making decent money, but
so
they're doing
you broke up for a second.
Oh, sorry. So it's like people who are already working for the state, the federal government, a university or whatever, IBM, Glaxo, whatever. They are making decent money, and then they're doing DoorDash. Right? Yeah. So I try to let them know, we try to make sure that we write off everything, all deductions, right? To try to try to help you out so you won't, you
Then they
paying all those
realized,
taxes.
then they realized they wasn't really making any money because of the game.
And
But anyway,
that too, because of all the wear and tear on their vehicles. But
yeah, but like I said, man, I don't want to be the cynic, man. You brought some good energy. I'm gonna leave it right there. I'm good, but we thank you for being here. You're now a friend.
I appreciate you guys for inviting me.
Absolutely.
I appreciate you guys for inviting me. I feel so special. Thank you so much.
Well, you are
cold conversation for the cold time of year, huh? Taxes and cold weather. They go together.
But you brought a warmth to it. You made it warm.
Yeah, absolutely.
Every time I started talking, the numbers dropped. People left the room. They're like, "Yo, this dude, yeah, we over there."
Oh, really? No.
The chat keeps it moving. Well, they know they hear me all
Look,
the time.
I sometimes am able to do what I'm able to do because you assist me as well, and so that's why my clientele has changed and upped a little bit, because I've gotten some knowledge from you, and you assist me, so I appreciate you.
Yes.
So that speaks to a couple of episodes where we talk about building your team, your strategic team, partnership team, ecosystem. So this is a perfect example of that dynamic, right? So just wanted to make that note for the listeners.
Yes, definitely.
Well, on behalf of Keisha, Miss Keisha, aka Tax Lady, you really got to get that shirt, yo. That was so high. You got to get that.
I need to get that. What is it?
Trademark. If you
can. Yeah, there you go. I couldn't think of the word.
But if you can do it with your name, Keisha the Tax Lady, I'm sure you can get that, because there's a lot of tax ladies. Well, we thank you once again. There's another episode of Heyward-CPA Live, where we talk about all things tax, accounting, business, psychological warfare, all types of things. So we out of here. Until in 2 weeks, we'll be back. Check us out. We out here. Peace, y'all. Peace. All right. Yes, sir. All right. Hold up.
Yeah.
Oh, she didn't. Well, they ain't in yet. Hold up. Why is they in, yo?